I'm sure many of us catch ourselves refreshing CoinMarketCap website, trying to look at the prices of the market, trying to see or anticipate when is Bitcoin, Ethereum, when is the market going to finally hit the bull run cycle. I'm sure we're all on the same page. We're all asking ourselves that question. And we all starting to get impatient, or we're asking ourselves certain questions that are clogging up our minds, and some of us even get so to a stage where we even get anxiety, we get anxious, we get impatient, and all of that. But in this video today, I just want us to take a step back, take a deep breath, and to remind us of one thing. If you know that something is coming for sure, yes, you don't know exact month, week, time, day, but you know it's coming. And isn't it more valuable to know that? And rather than asking yourselves and breaking your head over when is it coming, to focus more on, am I prepared? Do I have enough? Am I ready? So that when that time comes that I'm so anxious about, I won't be caught unaware. I won't be caught unprepared. These are the questions we should ask ourselves. Let's jump into this. As the markets are so volatile, like it is in every industry, there'll always be volatility. There'll be rushes and sell-offs and volatility, especially in a market that is barely only 3 trillion in market cap. And out of the 3 trillion in market cap, Bitcoin alone is sitting on almost 2 trillion. So 2/3 of the entire industry is under one coin. So that just shows you how small this industry still is. And Bitcoin dominance is at 59%, as you see here. So Bitcoin alone is almost 60%, represents more than half, like almost 60% of the entire industry. This is how young this industry is. So in the short term, the volatility, it really doesn't matter. And that's easy for you to say, Steve, but let's verify that statement. Why doesn't it matter? Let's look at why it doesn't matter. Let's start here. Keep in mind, this is the World Economic Forum. As we speak right now, great minds from all over the world are sitting right there in that snowy village in Switzerland known as Davos, and they are having deep discussions. And what many don't understand or still don't believe is actually happening in real time. And what's happening is that the new foundation of global finance and a dialogue is taking place between who? Banks and blockchains. So while others are still in disbelief and worried about the short-term volatility of the markets and being anxious and impatient, great minds understand that there's a new foundation of global finance, and that foundation is known as blockchain. And big banks who have been running the world for centuries are in talks now, in dialogue now, not in some random cafe, but at the World Economic Forum in Switzerland, in Davos. And what are they saying? Let's understand what is being discussed. What are they talking about? A convergence is a fancy word, just means coming together, right? A coming together, a get together is taking shape as banks adopt blockchain infrastructure. And blockchains evolve to the needs of regulated institutions and global enterprises. So where are we heading with this? We'll get there in a minute. So after years of experimentation at best, but mostly hesitation, the conditions are now finally in place for institutions to lean in. This is what we're talking about. In the short term, yes, the markets are still volatile, but now after testing, of years of testing, finally, it's in place now that institutions are coming in, regulations are being put in place, blockchain is being adopted, infrastructures are in the foreplace, blockchains are evolving, and the need for institutions being regulated is key right now. So the industry's next phase is clear global standards and mature and reliable infrastructures. So we need clearer global standards and a mature, reliable infrastructure. Now, let's bring this point even more home. Again, the coming together in the financial system is taking shape, right? Convergence between blockchain and the banks. Now, this is the point we are leading towards. It is much quieter than the hype cycles that came before it. The last three cycles, bull cycles, were based on hype. None of it was sustainable, durable, here to stay, nothing to do with regulation, clarity, none of it. So this time it's more quiet than the hype cycles before it. However, it is far more durable, meaning it is more sustainable and it's here to stay. It's not going anywhere. This is not just a quick hype cycle and then it's died out. It dies out. You have to wait another 4 years. No, this is a whole new financial system. Is taking shape. Let's wake up to this. Let's understand this. Blockchain technology is no longer just a hype cycle, 4-year hype cycles. It's now more durable and a whole new financial system is taking shape. We've been talking about all of this for so long. So banks are adopting blockchain infrastructure and blockchains are evolving to the needs of regulated institutions and global enterprises. They are coming together. And as a result, isn't a replacement of the old system or wild leap into a new one. It's a coming together, right? So two worlds are colliding in a good way. Keep in mind, it's quieter than the hype cycles, but it's more durable. So we are entering a system phase. How long have we been talking about this? This is a new system phase where core financial infrastructure is being rewired in real time as we speak. It's happening right now. Keep in mind, who is having this dialogue? They're having at the World Economic Forum, they're having this dialogue right now. So settlement, custody, and payments are shifting from batch processes to always on rails, 24/7, on-chain, easily accessible. That's what we're heading to. And who has the best use case right now? Stablecoins. They move value globally in seconds, not in days. Anytime to anyone. Tokenization pilots are now in production as we speak. And the institutions that shape global finance, including wealth managers, brokerages, payments giants, banks, are all rolling out digital assets capabilities at scale. This is what's happening right now, community. It's quieter, yes, than hype cycles. However, it's here to stay. It's more durable. So those who are short-term, impatient, and wanting a quick fix because we're so used to quick gratifications and all these dopamine shots, I want to remind us that this is not just another hype cycle like the previous 3 cycles. This one is far more durable. We are entering a new financial system and it's taking shape right now, and it's happening in real time. It's happening in real time. We're into a system phase right now. And this infrastructure, financial infrastructure, is being rewired, and it's being rewired in real time. So again, none of this happens without functioning dialogue between who? Banks and the blockchains. This is why you also see the Clarity Act going back and forth, right, between crypto projects or crypto companies and the existing banks. And we'll get to that briefly. We'll see how they're not just going to roll over and be run over by this new technology and the new entrepreneurs that are running this technology. So another thing I want us to look at is this. The first wave of crypto adoption happened entirely outside of the institutional world. Back then, the hype was metaverse, gaming, all these meme coins. That's what was pushing the narrative in the crypto world. That was before the institutions came in. But now we see a more focused, all we hear about now are real world assets, staking platforms, utilities such as tokenized assets, and tokenizing financial markets, bringing them on chain, stablecoins, DeFi, staking platforms, staking rewards. This is a whole new narrative that we're talking about now. Why? It's more mature. We're talking about maturity here now. Like we're talking about here. It's a more mature system right now. And this is exactly the difference. This is the difference right now. Because we're talking about global standards that is mature and reliable. And it's all built around an infrastructure. So now that we know that, let's get to something here. I want us to look at something else here. The idea is simple, right? So what we're doing is represent other real-world assets as programmable digital objects that we just talked about. So institutions value tokenizations, not because it's novelty, but for its operational speed, right? Instant transfer and programmability. Inside banks and fintechs, tokenization isn't seen as an experiment anymore. Those days are gone. Tokenization is no more experiment. It's the future. It's happening in real time. And this is why the BlackRock CEO, Larry Fink, keeps talking about tokenization of assets. And this is why he also launched BIDL on Ethereum, but that's a whole different topic. And I want to finish this article by this right here. So the invisible future, blockchain as background infrastructure. So if you zoom out, the most transformative technologies are the ones that eventually disappear. And understand what they mean with disappear. Like right now, even the website I'm using right now, it's under the technology of TCP/IP. But how many of us are browsing the web every single day, watching this video from the internet right now, from your phone, from your browser, and you don't know nothing about TCP/IP technology, right? So when you open a browser, you don't know about this technology. You don't think about it. Or if you're running your GPS, if you want to get from A to B with your vehicle, you don't know about GPS protocols, right? Or when you are ordering your Uber or your Grab or whatever, you just want to get to the ride and you want to get your destination. You don't ask yourself, what's the technology behind it? Same thing with HTML and CSS, right? When you're scrolling websites, you just want a secure website, right? You just want it to render instantly on any device. You don't worry about the technology. Same thing is going to happen with blockchain. And this is heading forward will be the same concept. Nobody's going to worry about, oh, what's the technology behind it? It's just going to happen seamless. But we are at the stage where all of this is, we're not even there yet. So if you're already tired and impatient and the whole technology is not even where it needs to be, and we are heading towards a more mature and durable system, these hype cycles previously, the 3 hype cycles, they came and were gone. But this time we are talking about a durable, a change, a shift of system that is here to stay. Spearheaded by stablecoins. They already offer a glimpse of this, just a glimpse. And many platforms now let customers fund accounts instantly with a single click. Users aren't choosing chains. They're examining addresses or thinking about gas fees. They're just completing an account-to-account transfer. That's where we're headed towards, community. That's where we're headed towards. And let's close out with this. So tokenization will follow exactly this pattern. This is where we're headed towards. A more mature industry, more durable industry based on infrastructures, clarity, regulation. It's no more just based on quick fix, quick dopamine shots, and quick hype cycles, but it's here to stay. And the assets will move faster. The settlements windows will shrink and the operational headaches will fade. Customers won't care about the blockchains are involved. They only care about the experiences is better. So what we're talking about here is traditional compliance frameworks running alongside blockchain programmability, creating financial services that are faster, cheaper, and more global than what came before. And it's due because the financial system is still running under the 1970 softwares. The financial industry needs a major update. a major upgrade. Now that we know all of this, of course, this is not just going to come easily, because the entire financial system is changing. The existing banks, the gatekeepers, the big banks, are doing everything they can to stop some of the crypto legislations. We've been seeing this. This is why the Clarity Act has not been going through yet. They're still in dialogue, going back and forth. They took that dialogue to Davos right now as well. So the big banks have been an absolute monopoly over our financial system for years, actually for centuries, right? And now they're seeing that the change is coming in real time. And that change is known as DeFi, is known as blockchain technology. And we see, even though it's still only at 120 billion, can you imagine how tiny this industry is? It's barely at 100 billion right now, 120 billion to be exact. And we already have a financial system in DeFi. Aave is the largest lending platform. Right now, if you have assets such as stablecoin or Bitcoin or Ethereum, you can lend to yourself. You can use your assets, your cryptocurrencies, as collateral and borrow money without any paperwork, IDs, none of that. You just need your DeFi wallet, whether it's a MetaMask Trust wallet, Coinbase wallet, whatever the case may be. You connect it to the application Aave. You use your existing Ethereum as collateral or stablecoin or whatever other asset that you have, and you lend, you borrow money against your asset. If you want staking, there are staking platforms all over. If you want to trade, there's Uniswap. All of these are DeFi platforms, meaning there's no intermediaries, no KYC, no ID checking, none of that. You can just connect and do it. So we already have an existing system, monetary system. Where is majority of this 100 billion taking place? We've talked about this. Out of the 120, 119, 70, almost 70 billion is taking place right here on Ethereum. And with stablecoins, majority of the stablecoins taking place on Ethereum. And look at the applications. If you have Lido staking platforms, if you want lending, Aave is the largest lending platform. Like we said, if you want exchanges, you can trade and swap tokens, trade tokens on Uniswap, borrow and on Aave, stake on all these different proof of stake platforms, utility tokens. So we see tokenizations are taking place here, real world assets, tokenized gold we see here. So we see already activities, some shades of the new financial system taking shape, and predominantly it's taking shape on Ethereum. That's where the infrastructures are being built that we just talked about earlier in that article. Infrastructures, regulations. We wonder, why is Ethereum not taking off? Because it's the place where global finance is getting ready to take place, and it can't take off without clarity, without regulation, without approvals, because now institutions are finding their home on Ethereum, and they can't roll out their products without clarity, regulation, because they're regulated. So we just talked about, let's go back on how tiny this industry still is. If we go to all, we're looking at barely 100 billion, right? But let's look at the global market. How large is the global financial market? It exceeds 1 quadrillion. This is a number that many of us can't even really fully understand. And in this chart, I really want to highlight how early we are in this industry. So these are rates. We always talk about how one of the largest markets are the bond market, right? We see the bond markets here. We see the credit, right, market. We see equities, which are stocks. We see money market funds here, 9. We see foreign exchange, right, FX. And then look at here, digital assets. It's the smallest out of all of them. It's the smallest. So we are nowhere yet. Now, keep in mind, tokenization is the future. We just looked at it. Everything is getting ready to be tokenized. There's a dialogue going on actively right now. The future of finance is tokenization of assets. So tokenization of assets, all these, the money market funds, equities, stocks, credit, foreign exchanges, which represent stablecoins, money market funds. We see the bond markets, commodities. All of this is getting ready to be tokenized. So imagine all of this that we're seeing right now is getting ready to come under this umbrella right here, digital assets, tokenization. And it's $1 quadrillion. That was in 2023. I really want us to wrap our head around it. So instead of groaning and moaning and worrying about when is bull run coming, we should ask ourselves a whole different question. With all these quadrillion of dollars coming on chain, am I prepared? Am I ready? Am I within the right ecosystem? Am I within the ecosystem that is suitable for me and that will make the most, make the most out of this cycle when it's finally here? These are the questions we should ask ourselves, but we'll get back to that at the end. We'll close out with that. Let's continue. Another thing I like always to do is to verify facts. So we hear that stablecoins have been, or rather are the first, give us the first glimpse in all of this. So Jeremy Allery is the CEO of Circle. Circle is, like we know, the issuers of USDC stablecoin. Now, he was talking about how he projects 40% annual stablecoin growth as banks shift from testing to live deployment, right? And is saying that virtually every major global bank is discussing USDC integration right now with him, right? With Circle, USDC stablecoin. So there'll be an annual 40% growth. Right now, with the momentum that we are heading towards, the clarity that is coming, maturity, infrastructures that are being built and are lined up and ready, we see that there's a growth as banks shift from testing to live deployment. And they're deploying their stablecoins, will be deploying live and also trying to integrate existing stablecoins like USDC. That is literally the only fully regulated stablecoin right now in the world. So we see that, yes, indeed, the future right now is driven by stablecoin. And why is stablecoin so important? Because it brings demand not just to the US dollar, but it brings demand to the digital, to the bonds as well, US treasuries to be specific. And the digital representation of US treasuries is BIDL. That was the same token that the sitting World Economic Forum CEO Larry Fink and also the CEO of BlackRock has launched on Ethereum. So he has the digital version of US treasuries in a tokenized version on Ethereum. So while stablecoin issuers will be issuing more stablecoins, these stablecoins they're issuing, every single one of them will have to be backed by treasuries, US treasuries, and preferably it will be in digital form. That's why JP Morgan launched their own digital version of US treasuries. BlackRock has already launched theirs, and many other international banks are launching as well. Another thing I want us to look at is that it's not limited to the US dollar alone, because Hong Kong now is getting ready to approve the first batch of stablecoin issuers in the first quarter. So within from now to March, they're getting ready to approve stablecoins. And Hong Kong obviously is part of China, meaning that we're talking about yuan, digital yuan now. So after receiving 36 applications since launching its regulatory framework last August. So we see that it's now going beyond just the US digital or digital dollar. Now it's digital yuan. We already know that early 2026, within the first quarter also, we know that the euro, the digital euro, also is going to be launched. Circle, the USDC issuers already also launched a euro version of our stablecoin as well. But there will be more launched, specifically from European countries under MiCA framework as well. So, like we said, we saw it here. The city's stablecoin licensing regime passed in 2025 requires issuers to meet strict reserves, redemption, and all of these reserves and redemption of the stablecoins go under risk management. And these are set standards that need to be. So the Hong Kong Financial Security Secretary, the Hong Kong Regulatory Agency is very strict. they require issuers to meet strict reserves. Why? Reserves means liquidity. Liquidity for what? Liquidity for redemption. What does redemption mean? Whenever the holder of that stablecoin or that token is ready to exit or sell, they need to be able to redeem whatever the cash that they want. And how will they redeem something if there's no reserves? What are reserves? Liquidity. So why is it? And all of these go under risk management. And these are standards. These are regulations. These are the things that need to be set on a global scale so that issuers, on a global scale, crypto can be regulated. People always think that regulations in crypto is always something negative, something bad. But actually, it's good because it puts a standard on a global standard that requires issuers and players on the blockchain market to meet certain standards. If you don't meet them, you're not competitive, you'll fall out, you'll fade out, you're irrelevant. And this is why it's important to meet and to have regulations so that there's some standards, minimum standards that need to be met. And if these stablecoins need to meet certain standards, and we know that stablecoins are the key drivers in this industry. And what standards do they have to meet? You need to have liquidity. Why? So that your holders can redeem, and this goes under risk management. So if this is so important, community, if this is so important to meet certain standards and to have enough reserves so that those who are holding the tokens can redeem their assets for cash, for liquidity, why can't we do the same thing in the crypto industry? This just shows us how backwards we still are. Even though the industry is 16 years old, we still have not gone anywhere. And let me back what I'm trying to say. So first of all, Vivek was one of the individuals that was running for president, right? Under the same banner with the now sitting President Trump. And he has a company known as Strive. And now he's proposing 150 million preferred stock sale, meaning he wants to dilute his stock, his shares of his company, Strive, by selling them to raise 150 million. For what? So he wants to raise debt by diluting his stock to repay debt that he already accumulated. So take on more debt, dilute your stock. Meanwhile, you are doing that to repay existing debt, and then the rest of it, you want to buy Bitcoin with it. So, and then you see here, people are so happy about this. Nothing stops this train. And you just see ignorance here, because how can you be excited about a system that is diluting 150 million of stocks, taking on more by selling them and taking on more debt to only repay the debt they already accumulated prior, and then they buy more Bitcoin with it? How is this fundamentally sound? How is this sustainable? Let's go back to regulations. Meanwhile, you see that you have to meet strict reserve, which means liquidity standards, redemption standards, and risk management standards. So why wait until there's clear regulations if you can understand and see how important? This is why we always talk about fundamentals. Have strong, sustainable fundamentals. We implemented these strong fundamentals from day one. This is why we always talk about the 4 challenges: lack of liquidity, inflation, unsustainable staking distributions, use your volume efficiently. Why are we talking about this? There are no standards to meet those. But why we didn't want to wait for the standards to be implemented for us to now go back to the drawing board and waste 3 years. So before you launch a token, an ecosystem, understand the industry, identify the challenges, and implement solutions that are addressing these challenges, so that when these regulations come, that you need to have liquidity so that the holders can redeem their assets. And this is how you manage your risk. We won't have to go back to the drawing board, but we'll have this already in place from day one. And this is the point we're trying to make. Existing crypto projects right now, they don't have those strict standards. They don't have reserves. Actually, they're taking on more sale by diluting millions, hundreds of millions of dollars of their shares to just repay the existing debt they already have and to buy Bitcoin with it. How is this a business, sustainable business form? And once these regulations come in, such businesses are not going to be around long because you need to have operational income. How are you having operational income as a business if you have to always just keep diluting your stock and to repay debt and then to buy Bitcoin with it? So you use debt to repay the existing debt and then to buy Bitcoin with it. I'll let you be the judge for yourself whether that's a sustainable business model. Talking about sustainable business models, these digital asset treasuries are using the same system. So strategies and challenges towards a sustainable industry model. So this has been the industry model, but is it sustainable? No, it's not sustainable. We all know how it ends whenever you use debt to pay out even more the existing debt. And we all know how that ends. So what are digital asset treasuries or DAT? By now, we should all know what it is, but just for the sake of the point. So since early 2020s, digital assets have steadily moved beyond the realm of individual investors to become a core component of institutional financial strategy. So one of the most prominent examples is strategy, right? Because we have Michael Saylor is very vocal. He's on every podcast and he's talking about how just keep buying Bitcoin and never sell it, right? So he refined itself as Bitcoin holding company. So after converting the excess cash in 2020 into Bitcoin. So many companies after that followed their footsteps, and one of them is MetaPlanet, right? And what are they doing? They're employing a diverse funding mechanisms. This is a beautiful word, meaning that you're using debt. So you have debt. Funding is debt, right? Funding means debt. So using debt mechanisms to acquire more of that digital asset. So it's not just Stripe that is doing that. And it's not just strategy that is doing that. They're the ones who pioneered it, actually. But you see, this is the theme within DATS, digital asset treasuries. They're using a system that all you need to do is keep diluting your shares, use the debt that you accumulated after diluting your share to pay down the debts you had from last month, and then use the rest to buy even more Bitcoin. So we understand that this is not a sustainable model. It's not a sustainable business model whatsoever. It's not the way to operate a business. And another thing that I want us to look at is this right here. Why is it not sustainable? Because first, MetaPlanet, these businesses lack any operating cash flow on its own. They don't have cash flow. And they rely entirely, not partially, entirely on external capital instruments, meaning debt. Capital instruments is debt. So you are a business, but you lack operational cash flow. Does this sound familiar? Sounds like the dot-com bubble all over again, right? We had a lot of websites, a lot of internet companies during the dot-com bubble. They didn't have any cash flow, but because they are having a fancy website and talking about how internet is going to revolutionize the future, they got funding. And this is exactly what we're seeing again, right? They just say, oh, Bitcoin is the future. Okay, we are adopting Bitcoin. Boom. They get funded, but they have no operational cash flow. They entirely depend on external debt. And this, in a rising market, is going to work, right? This enables positive feedback loop, actually, because it will push up your shares. The higher your shares go, that means you'll be able to raise even more capital, meaning you'll raise even more debt, and then you use this debt to further purchase even more BTC. However, in a bear market, this structure can invert, meaning it backfires literally. And it's known as an automatic death spiral. It's a death spiral. So once it starts to backfire and invert, meaning it backfires, your stocks start falling, right? And once your stocks falling, you can't raise any more money. So the only way for you to do is to just keep increasing the share issuance, meaning you keep diluting your shares, and this intensifies the dilution, and this further declines the price. So you see, it does the opposite. And we all know how this is going to end. And the worst thing about this is MicroStrategy holds over 700,000 Bitcoin right now, close to 60 billion. So the impact of that is going to be like massive, right? If you have to rely on the price just always going up based on speculation, but not based on your operating cash flow, this is a challenge. Let's look at this even further. MicroStrategy, now branded Strategy, is experiencing significant operating losses, right? And rather than the fund of, okay, and despite owning, like we say, 700,000 Bitcoin as of January 2026, which we said, the company reported $1 billion in Q4 2024 loss, right? Followed by a reported 17 billion in unrealized losses in last quarter, last year, Q4 in 2025. So why are we mentioning this? Is because the same thing right here. So while annual software revenue is roughly 460 to 500 million, it is insufficient to cover the high interest costs on the debt used to acquire more Bitcoin. So your operating income is not enough to cover the high interest costs you use to acquire Bitcoin. So instead of using operational cash flow, you're using debt to acquire something that is volatile and that in itself is not an active, is not a passive investment. So this is exactly what the danger is, and this is what creates a bubble. So, and this dilutes the stocks through equity sales, like we just said. So you're selling your stock, you're diluting it to fund purchases. This is not a sustainable business model, community. But this is why we see here, while institutions are setting regulations, setting high standards so that you have liquidity, so that your token holders can redeem their assets because you're on top of risk management. Meanwhile, in the crypto world, we are busy using unsustainable, debt-driven instruments to purchase, using debt to purchase the assets that we are believing is the future. And this is not a sustainable business model. The questions we should ask ourselves, community, is not when is the quadrillion coming, because it's obviously coming, because nobody knows exactly. We should ask ourselves, are we within an ecosystem that is scarce, that is banning the supply, reducing it? Are we within a community ecosystem that is retaining liquidity, that is accumulating USDC or staking rewards sustainably, and that is using its volume efficiently? If you can answer with yes, all you need to do is be active in the community, keep getting involved in the community, attending the events, community events that we have, retweets that we have every day. Be active, be engaged. That's all we need to do, because the quadrillion of dollars in liquidity is coming. But how is that going to benefit you and me if we are not within an ecosystem, a community that is addressing the 4 challenges in the industry? What are they? Inflation. How are you addressing it? Do you have a banning mechanism? Is your token supply shrinking? Is it decreasing? Because right now, assets, why are people running to gold and silver? It's because those are the most scarce or rather deflationary assets right now, known as safe haven. You can't print too many of it. There's a limited amount. And it takes a lot of effort and work to even process, to mine that gold. And majority of the silver is even used for the industry, right? It's an industrial product. It's used for your cell phones, for gadgets, for solar panels, for vehicles, so many things, not just for jewel, besides for as an asset as well. So don't we see the similarities? It's one thing to be early in an industry, to be impatient and wanting everything to happen now. But more importantly is, are you aware that you are within the right industry? Are you holding the right tokens? Are you prepared? Is your bag filled enough so that when that liquidity comes in, you'll be set? The beautiful thing about the crypto industry is that it only takes one cycle, one bull cycle. And this cycle is not going to be one with a few $100 million or a few $1 billion. We just saw that this is a whole different beast, community. We are talking about $1 quadrillion industry. And this is not some random just event, but rather this is one that is mature. This is one that is here to stay. This is one that is not going anywhere. And this is the difference, community. So let's close out with this. I love this statement. And for those who don't know who quoted this is Satoshi Nakamoto. For those who don't know who Satoshi Nakamoto is, let me just introduce him or them. Satoshi Nakamoto is the pseudonym given to the person or group known as the creator of Bitcoin. And what did they say? Let's go back here. They said, if you don't believe me or don't get it, I don't have time to try to convince you. Sorry. There's so much truth to this statement. And at first glance, it sounds harsh. It sounds insensitive, but it has so much truth to it. Because we are not in the business of convincing people. We're just here to inform, educate, inspire. We're all adults. We all make our own choices and decisions. We all have histories where we were told, oh, get into this, get into that, and we refuse. And then now, years down the road, we wish we would have done that, right? So here we are again. We have an opportunity. We are early in this industry. Regulations are not even here yet. The World Economic Forum is lining up, telling us in real time, tokenization is the future. We're looking at a $1 quadrillion industry of tokenizing assets that are coming on chain, predominantly on Ethereum. What you should ask yourself right now is, am I ready? Am I prepared? Am I within the right ecosystem? Am I holding the right token? Do I have enough of it? Is my bag secured? Am I ready? That's the question we should ask ourselves. The question when is it coming is not the right question, because it is coming. It's obvious. Everybody knows it's coming. The only thing nobody knows is the exact day and time, but it's coming. So use that time to position yourself, to be in the right ecosystem, to hold the right tokens, the right assets, so that when that liquidity comes in, you'll make the most out of this once in a lifetime wealth transfer event that is taking place. And there won't be another event like this in human history anymore. So let's make the most out of this, community. This is it for today. And I really want to get more into this topic, but we'll talk about it more tomorrow. The importance of sustainable assets and sustainable fundamentals, and not just these like we see here, we see happening here, all these mechanisms that are unsustainable. But we'll talk more about this tomorrow. So tune in tomorrow in our Twitter space on Saturday. I'll have a session in regards to this, and I'll mention NVIDIA and the whole AI structure that is taking place, and the importance of having strong fundamentals if you want to be part or make the most out of this liquidity event that is about to come to us. So this is it, community. I hope the message was clear, it came across, and I really want us to understand one thing. Let's understand this, right? This is not our opinion. He says, if you don't believe me or you don't get it, I don't have the time to try to convince you. Sorry. We are not taking this approach. We are here regularly every week. We are here. We keep informing, we keep educating, we keep inspiring. We have tweeting events every single day. We put out the word and we want to inform, educate, and inspire. So this is what Satoshi said. If you don't believe me, if you don't get it, I don't have the time to try to convince you. Sorry. So let everybody make their own choices and decisions. We're only here to inform, educate, inspire. Thank you very much, community. I want to wish you all a wonderful, wonderful rest of your Friday. And let's meet tomorrow on our community event. Also, I want to encourage us to participate today as Queen Debbie is going to host as usual every Friday, and Queen Jane, they're going to have a beautiful session today. So let's give them the support and love that they deserve. And thank you very much, community. I wish you all a wonderful rest of your Friday. Till tomorrow. Bye-bye, everyone.